Hello, welcome to the AXINO Small Cap Investor channel. Today I would like to get your attention to the Canadian Global Atomic Corporation, which offers investors a two-pillar business model with zinc production in Turkey and uranium production in West Africa. Global Atomic is listed on the TSX Venture Exchange and on the Frankfurt Stock Exchange. There are currently approximately 107 million shares outstanding, which gives the company a market cap of only 36 million Canadian dollars. Please note that Global has spent to date approximately $100 million on the company's projects together. The company is led by successful entrepreneur Stephen G. Roman, who is currently also CEO of Hard Gold Corporation. Stephen has founded Gold Eagle Mines and sold the company for $1.5 million to Gold Corp some 10 years ago. So he knows the business very well and is committed to develop sustainable projects with providing shareholders with a solid cash flow base from multiple operations. Why is Global so unique, and what is behind the two-pillar business model? Let's start first with Global's existing cash flow business, which is a joint venture with the European recycler Befesa Zinc and the company. With a 51% stake in the joint venture company called Befesa Silvermet Turkey, Befesa is the operator of the high-grade zinc processing facility in Iskenderun. In 2016, Turkey was the 7th country among the steel-producing countries in the world. Furthermore, 65% of the steel production has come from electric arc furnace steelmaking. The steel producers are keen in getting rid of the dust, which gives Befesa into the game for extracting the valuable zinc in the dust. Befesa Silvermet is smelting the material in its 60,000-ton capacity Wells kiln, which is a kind of rotating autoclave we do know from gold mines. The EU standards are increasing the environmental regulations in Turkey as well, and therefore are supporting the global business strategy to increase the operation. For the fiscal year 2017, Global has received 7.2 million Canadian dollars dividend check as the joint venture operation has delivered a record year of zinc production, resulting in an EBITDA of $10.8 million for Global Atomic and its shareholders. It is important to know that the joint venture partners have already agreed on a planned expansion to increase the annual throughput capacity from 60,000 to 110,000 tons per annum. The cash flow and credit lines will cover the expansion of $26 million. It is expected that the joint venture is going to produce 55 to 65 million pounds of zinc concentrate per annum once the expansion is completed during 2019. Now I invite you to further listen to my introduction of the company and its operation. As the next 2 minutes, I will show you our filming during the site visit the AXINO team has done in Turkey in early June 2018.
Professor, we close the cycle.
I hope you are getting as excited as I am already. Please note that the AXINO group of companies has bought shares in Global Atomic during the last 6 months and still hold those shares. We could increase or decrease our current position. For transparency reasons, we would like to express a potential conflict of interest, shown also in our disclaimer. But it is a matter of fact that we are in the same boat as any other shareholder, and we would lose money as well if the stock would go down and not up in the future. Let's switch to Global's even more upside potential, the DASA uranium project in West Africa. Niger is known as a mining-friendly jurisdiction with excellent infrastructure. The country is one of the world's largest uranium-producing regions, ranking as the 4th in global uranium production. The DASA project is in the Tim-Melsoy Basin and has the highest grade uranium resource outside the Athabasca Basin in Canada. Please allow me to explain the DASA project and its potential as simple as possible. Global has already confirmed an indicated resource of 64.8 million pounds of uranium and an inferred resource of 48.4 million pounds of high-grade uranium oxide. Recent drilling has tripled the indicated resource at the conceptual open-pit mining area. To date, approximately 135,000 meters of reverse circulation and diamond drilling has been completed on Global's 100% owned uranium project. So the more important question is, how could Global make money at DASA with a potential uranium production, especially with the current very weak uranium spot price of only $22? It sounds very simple. Global has already signed an MOU, Memorandum of Understanding, with Orano Mining, previously known as Areva. Orano has agreed on buying a minimum of 100,000 tons of uranium oxide annually for processing through their existing plant some 80 kilometers from the DASA project. The key is that Global does not need its own mill. Therefore, the initial capex is very low. Preliminary estimates of the company are approximately $25 million for the necessary mine development. This brings Global in a unique position, as the company would make money even at today's low uranium spot price. The transportation costs are also not very high, so that this operation could be highly profitable. And the good thing is, Orano does need the ore for existing free capacity on plants they operate. CEO Stephen G. Rowan believes that the DASA could deliver first cash flow before 2020 already, and that the uranium price may increase in the future with global demand increase of energy, especially with a further shift towards the already started global e-mobility trend. Global's next milestone could be a preliminary economic assessment study, a PEA, for an initial open pit mining scenario during phase 1 production. Permitting for potential start of production is not seen as an issue and could definitely be granted much quicker than in Canada. Please have a look at Global Atomic's website and corporate presentation. I would be delighted if you could conclude after your due diligence and research that this is an excellent small cap with a lot of potential to grow. The great fact is that Global Atomic is already cash flow positive through its joint venture operation in Turkey. Check the company out and please ask any questions you may have. All the best.